Mr. Ambreesh Baliga. Sir, the last time we spoke, you had put out a target of about 19,500 on Nifty. The markets have been rather choppy. Since then, we have had a lot of macro events as well. Fed has come out with its policy, RBI has come out with its policy. We have had a budget, and inflation data has also come out. What's your assessment of the markets now? Is 19,500 still a possibility?
No, that's still a possibility. Clearly, looking at the sort of valuations which are there in the market, and if you're looking at the news flows, yes, I think the budget was decent, no doubt. RBI policy, to a certain extent, disappointed. I mean, although people were expecting status quo, but clearly, I think there was an expectation of increasing liquidity. I mean, which really did not happen. And I think the markets were also looking at some sort of a timeline for the rate reduction. Even that is not very clear. So I
Hmm.
think because of this, we saw some correction at that point of time. And now, if you look at the latest sort of macros, the macro numbers which have come out are decent, no doubt. If you look at the IIP, look at the inflation, I mean, decently benign. So that's clearly good. But then, on the other hand, if you look at the oil prices, I mean, quietly they have started inching up. And it's very much possible that we could see levels of about 85, $86 over the next couple of weeks. And the other thing which has come up in the last couple of days is the farmer protests. Because if you remember, I mean, last time we had those farmers protests, I mean, it went on for long. There was a certain amount of uncertainty. So that could again come back. And along with that, we may have the election dates being announced quite soon. I think mostly before the end of this month. And once the election dates are announced, you have the election fever starting, which again means some amount of uncertainty for the markets. So overall, I would say that the pressure would be there, no doubt. And this, I mean, if you look at the earlier falls in the last 3 or 4 months, whenever we had those corrections, we didn't really have the mid cap and the small caps cracking. But
Hmm.
this is after a long time we are seeing a decent crack in the mid cap and the small caps. If you look at the some of the, I mean the PSU basket, which had moved up sharply, I mean, which was a star performer, we have seen some of those stocks cracking by more than 20% over the last couple of days. So this is what I think could get the retail investors, I mean, slightly rattled. And if they slow down, I think, I mean, the markets can correct because they have been the major ones who have been supporting the markets over the last 12 to 18 months.
But Mr. Baliga, if you look at the last 3 or 4 months, I mean, we have seen one day falls for the mid caps and the small cap of about 3 to 4%, but the markets have bounced back and clawed back all those losses. What makes you think that this time, the situation is different?
No, because see, whenever there's a small fall, even about 5 to 8%, 10% sort of a fall in stocks, it is looked at as a discount sale. And people who had missed out earlier come back to buy, hoping that the momentum continues. And that proved right, at least for a while in the last couple of months. But then if you start seeing cracks of, say, 30, 40% in some of the mid cap and the small caps, I think that's when people get rattled because they're not used to seeing huge losses in their portfolios. So I'm not saying it's happening right now, but in case we see a further fall from here, I mean, if the Nifty goes below 21,400, 21,300, that's when you'll have the mid cap and the small cap indices falling more because this time we are seeing an underperformance from this side of the market. So when that happens, you will have individual stocks possibly cracking 10, 15, 20% in a very short while. So that's what will finally rattle the investors.
And do you think that some of these, of course, PSU stocks have very low float and government holding is pretty high, in some cases over 90%? Do you think that could be a factor that could lead to sharp corrections? Because the past 3 or 4 times when government has tried to offload its stake in companies, they
Right.
have offered it at a huge discount, a 10 to 15% discount to market prices. Do you think that could lead to further pressure in these PSU stocks?
I mean, see, this could have been true. I mean, if we were not so close to the elections, if this was much before the budget, yes, I mean, we could have surely expected the government to come out with a follow-on public offer, which would have created pressure for these stocks. But fortunately, I mean, at least this part is out, at least till post-elections, maybe post-July, in case I mean, the markets hold on. and these stocks continue to quote closer to the current levels, we'll have FPOs coming in. But then, despite this, I'm saying that there will be pressure on these stocks because we've seen all these stocks becoming five baggers, even 10 baggers like in some cases in the last 12 to 18 months, which is not sustainable because you don't really, I mean, all the performance is improved for quite a few of them, no doubt. But then the performance is not commensurate with the sort of an increase which you're seeing in the prices. So because of which I'm saying there's this huge amount of euphoria, there's a lot of froth in these stocks which need to get corrected. And in case, I mean, if like what you're saying, if the FPO or the government decides to exit, not exit, reduce their holding in some of these counters, I
Hmm.
mean, that put in much more pressure. But like I
Right.
said, fortunately, that is out of the way, at least for the next couple of months till post-elections.
All right, and we are of course in the midst of the earnings season, and today we have Eicher Motors that will come out with its numbers. Sir, I'll come to you in just a bit. Amit has the expectations or the street word on Eicher. Amit.
The makers of Royal Enfield are due to announce their Q3 results today. Analysts are expecting almost a 30% jump in net profits, almost a 8.2% jump in revenues. EBITDA margins likely to go up 300 basis points. Total sale volumes rose 3.8% year on year to 2 lakhs 48,779 units up. Royal Enfield volumes themselves were up 3%. The number of units sold were 2,28,073. Now, looking at the stock, in the last 1 year, it has gained about 19%. But in the last few days, it is slipping down. How does one approach this stock? Were the sales jumps only because of the holiday season and the festive season, or people are cashing out?
Mr. Baliga, that's for you.
If you're talking of Eicher Motors in specific, like it's been sort of, I would say, a bit of an underperformer if you look at the other auto stocks. The Royal Enfield story played out extremely well over the last couple of years. But then now what we're seeing is there's a decent amount of competition coming in. If you remember, just a month back, Hero MotoCorp has announced or they have launched a couple of these premium bikes, especially in collaboration with Harley Davidson. I think this will possibly eat into the Enfield market, and that's I think what is worrying the investors to a certain extent.
Sir, you spoke about Hero MotoCorp, but compared to Hero MotoCorp, do you think it is that competition that is likely to hurt Royal Enfield in the times to come, or is it something else and that is why the stock is going down in recent times and has basically underperformed even over the last 1 year?
Absolutely. Like I said, it's been underperforming for the last 1 year. Again, if you look at the performance, the sort of growth which we have seen in the past is not really happening. And now, like I said, with Hero MotoCorp's premium bikes, there'll be more competition for Royal Enfield, which will again put pressure on margins as well as the top line.
All right, and Mr. Baliga, before we let you go, what the markets have been choppy, and we have been talking about it for the past half an hour. But where do you see valuation in a market like this, sir?
See, I mean, valuation is there in the IT space as well as the pharma space. Despite the run-up which we have seen in pharma, I mean, we have had a couple of stocks, especially the last gap months, doubling from their lows in the last 18 months. But still, I think the valuation is decent there. But again, a caveat that in case we see the markets correcting, like the way I said, possibly 19,500 levels is what I'm looking at. In that case, you can't have IT and pharma going against the market. They would also correct, but surely they will correct less than the market. So, in market parlance, we say it's an outperformance. But end of the day, it can incur losses if you buy now, but the losses will be lower than the other stocks.
Words of wisdom coming from Mr. Ambreesh Baliga, as always, sir. Always a pleasure speaking to you. Thank you for joining us here on News 9.